Election day is next week. What does history tell us that means for the stock market? Hello again, and thanks for checking us out on the Fastest Four. Well, October was a fantastic month for the market. The S&P 500 gained almost 8% last month. The Dow was up 14%, its best October performance ever, and its biggest monthly gain since 1976. Of course, we are still in bear market territory. Economic data will determine long-term where we go from here. But in the meantime, we're taking a look today at what role the midterm elections could play in stock market results. First of all, just entering November is worth talking about for stock market optimism. We've just entered the best performing 6 months of the calendar year for the S&P 500. Since 1928, from November to April, the index has registered a cumulative return of 5,145%. Compare that to the other 6 months, May through October, which just has a cumulative return of 274%. November has an average gain of 2% over the past 20 years, second only to April. But could midterms disrupt that? The market never likes uncertainty. Right now, the expectation is that Republicans will win control of the Senate next week. If that doesn't happen, we might see a temporary recoil from investors simply because it would not be what they are expecting. But using history as our guide, the midterm elections are typically a bullish signal for the stock market. Looking at a chart from LPL Research that shows the quarterly performance of the S&P 500 broken down by each year of a presidential term illustrates this. We just entered the fourth quarter of the second year of President Biden's first term last month. This is the beginning of the best 2 quarters of stock market performance of any presidential term. The fourth quarter of the second year and the first quarter of year 3 are the best on record. Of course, that correlates with when the midterm elections are held. It's hard to know why the 2 post-election quarters have been so good. You could argue, generally, voters tend to balance the scales in a midterm election, and the market likes balance. Since 1862, the party of the sitting president has lost congressional seats in 35 of 40 midterm elections. Of the 5 elections in which the presidential party gained seats, 3 were Republican presidents and 2 were Democrats. The market doesn't seem to care which party has the White House, but it does seem to not like a single party to be in control of both the White House and Congress. Of course, the economic data will trump all the historical trends. We still need inflation under control, a slowdown in interest rate hikes by the Federal Reserve, and strong corporate earnings for history to repeat itself. Thanks for listening.